It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Stocks gain as Fed Chair Jay Powell says that interest rates will likely fall this year, but tensions between the U.S. and China keeping Hong Kong equities in check. Are U.S. tech stock valuations getting frothy? Well, we discussed that as the market cap of the Nasdaq Composite blows past the size of the U.S. economy. And in India, the RBI is on a crackdown drive against shadow lenders. We dive deeper into what's making the central bank nervous about the financial sector. And we get a great lineup of voices, including JP Morgan's head of EM Economics Research, Jahangir Aziz, and the CEO of Singapore's budget carrier. And we're talking about Scoot. Well, in the markets, it is about the Fed. It is about Jerome Powell weighing, saying, you know what, that rate cuts can wait, but it is appropriate to cut rates this year. Powell reiterating what he has said before, but conceded perhaps that it is appropriate to do that this year. We also heard from Neil Kashkari weighing in, saying that perhaps he sees two, but maybe just one rate cut this year. In the markets, in terms of benchmarks, the MSCI Asia Pac Index in positive territory for 2 days in a row, up about 0.3%. We're keeping an eye on the CSI 300 Index, currently up by 0.3%. It is about the NPC. It is day 3, and we had from the PBOC governor saying, you know what, there is still room for rate cuts, a triple R that investors have been waiting for. And we also heard from the CSRC chief saying that they will make some of those moves if, they need support in the market. And we have seen some support in the market already in terms of the CSI 300 Index in positive territory right now. And of course, in terms of the yen, it is front and center in the FX space, breaching that 150 level on the back of support from some government officials saying they support the move to hike rates this year. Well, now to our top story. Markets focusing on possible dovish moves. But before we get to that, we have breaking news out of China. China's trade data just out. January, February exports coming in positive 10.3% year on year in yuan terms, and that's according to CCTV. And imports at 6.7% year on year in yuan terms. Of course, trade front and center has been pretty sluggish. And in terms of USD terms, China Jan and Feb exports in USD terms rising 7.1% year on year. The estimate was for 1.9%. Bear in mind that it is exceeded expectations. China's trade data showing that expansion in terms of imports as well as exports. Let's put it all in perspective from our guest, Jahangir Aziz, head of EM Economics Research at JP Morgan. He spent 13 years at the IMF, where he headed the China division. Good to have you with us.
Good to be back.
First time in our city since the pandemic.
Since the pandemic, I've been doing this over Zoom, so it's great to be back physically.
So we're seeing improvement in terms of trade for China.
Yes,
when we take a look at the MPC and the messaging from there, is there any clarity at all that China is on the right track and is able to meet that 5% target?
So the 5% target, the way we are looking at it, is a story of two halves. In the first half, you're looking at about 5.5. That probably drops down to about 4.5 in the second half. And the reason being that it is not just what the NPC did, which is increase its fiscal deficit for this year, but what was done last year and how much of that is being carried over. If you remember, back in October, they did a trillion RMB, not dollars, trillion RMB of additional spending. Half of it was spent. Half of that is probably going to get carried over. So if you add the two of them together, what's been announced about 3.7, 3.8%, and the carryover about 0.4. You have about 0.4, 0.2% of additional fiscal spending deficit coming from the center. So I think that is going to support activity and already is supporting activity in the first half. But I think what is being missed is the fact that PBOC is finally getting into the act. So if I look at the liquidity provisioning that has been done since August of last year, just look at the reserve requirement cuts, look at the alphabet soup of the different facilities that they have, SLF, MLF, PSL, add them up together. Between August and now, 5.5% of GDP of liquidity has already been pumped in the economy. So I think that these policy support will keep growth to about 5.5% in the first half. Second half, most likely it's going to slow down. And so on the average, yeah, they might make it to 5 this year.
Trade is looking pretty strong.
Yes.
In fact, trade in USD terms has come out really gangbusters. I mean, beating estimates in a huge way. How are you reading into that? So
I would focus much more on the import side, because that's where the concern was. Is domestic demand strong enough? We know that fiscal policy and monetary policy, to be fair, has been biased towards basically increasing production and employment, etc. But that had created a massive gap between production capacity and what was happening to retail sales and consumption, creating a large overhang of inventories, which is weighing down on deflation in China. So I was really surprised and positively that you've seen a pickup in imports take place, which beat estimates. And I think that bodes well for at least some recovery taking place in that one area of weakness, which is consumption in China.
Exports are also important, because China has said that it wants to double down on exports. Should the rest of the world be concerned if China starts dumping cheap Chinese goods in the global economy?
Look, I think the word dumping is used very loosely, but if you look at what has happened to export prices in China, this is not new. This has been happening at least since April, May of last year, where export prices have been deflating both in dollar terms as well as in RMB terms. That deflation has slowed down, but that deflation continues. And I think we in the rest of the world have benefited massively from the deflation in terms of the normalization post-pandemic, which is probably one of the bigger reasons as to why we've seen this very spectacular disinflation in the rest of the world. So I think that that's a normal way in which you react, because you have a significant amount of finished good inventories, and that is basically phasing out. And if you have these kinds of export growth numbers, I think the capacity will be reduced. And with that, I think that export price deflation, I'm not talking about domestic price deflation, just export price deflation, will probably come to an end, which is actually a very good thing for China itself.
Jahangir, do you think the world is underestimating China's economic transition? It's identified new growth areas like EVs, like ion batteries, solar panels, for instance, and that takes time to grow, to get to where it needs to be. Is the world underappreciating that? We saw the same thing with Taiwan, with Japan, with Korea.
Right. So I would say definitely in the case of EV, China is almost on a warpath, right? If you look at across the board, both domestically as well as for export capacity, EV is that one single success story that China can actually show and say, look, we can take a technology and we can make it, indigenize it, and actually be world leaders in that. But I would say that while EV is that strong story, I think we are also at the same time looking at China actually finding it difficult to get around the spillover and the impact of the restrictions that U.S. has intensified on semiconductor technology. And I think it's a balance between the two of them. Yes, in some areas China is progressing, but in other areas which depend upon these advanced semiconductors, I'm talking about robotic. I'm not just talking about semiconductors, but it's spillover into robotics and smart pharmaceuticals and AI. I think we need to keep a lookout for that. So yes, it's probably both of them are happening, and at this point in time, EV is the shining sort of story from coming out of China.
And of course, we just had a story talking about how the U.S. is putting pressure a lot on the likes of South Korea, on Japan, to clamp down further on China's access to semiconductors and its technology. How might this play out on China's economy, and how do you see China coming back from that?
So we've already downgraded potential growth in China from around the 5-6% back prior to the pandemic to about 4% going forward in the next 2 years. A key driver of that has been the spillover coming out from these restrictions, because they do have a much broader impact than just the semiconductors. And in addition to that, it's also the languishing of private sector confidence in China because of the arbitrary regulatory changes that took place in 2020 and 2021. So I think both of them are at play, but I think that the impact is already being seen in the decline in potential growth in most analysts' mind. How much are they attributing that to the technology restrictions? I don't know. We are attributing a lot to the impact of the technology restrictions.
Okay, Jahangir, hang tight. He's
Sure.
sticking around. Jahangir Aziz. JP Morgan, he'll be sticking around with us now. China's Foreign Minister Wang Yi has told a media conference at the NPC that ties with the U.S. have improved since President Xi's meeting last November with Joe Biden. Even so, Wang says the U.S. still has not fulfilled its promises and is using tactics to suppress China.
The challenge for the U.S. comes from itself, not from China. If the U.S. is obsessed with suppressing China, it will eventually harm itself. We urge the U.S. to be clear-eyed about the trend of the times, view China's development objectively and rationally, engage in exchanges with China proactively and pragmatically, and to act to fulfill its commitments. We hope that it will work with China to bring the relationship back on the track of stable, sound, and sustainable development.
And speaking of souring ties, Wuxi AppTec and Wuxi Biologics shares tumbled after U.S. Senate committee advanced a bill Wednesday that may ban Chinese biotech firms and some others from federal context. Wuxi Biologics currently down by almost 20%. Wuxi AppTec down by 17%. Losses too for some of those other stocks. JD.com, though, bucking the trend, up by 7% right now. JD.com posting the biggest gain since 2022. After it reported better than expected revenue, 3.6% increase. Then, of course, JD shares surging more than 16% in New York. Still ahead this hour, we'll speak with the CEO of Singapore Airlines budget carrier Scoot about its expansion strategy and post-pandemic recovery. Plus, Woodside Capital Advisors tells us why they think Indian markets are slightly overbought. Keep it here with us. This is Bloomberg. Welcome back. Fed Chair Jerome Powell, in testimony to lawmakers, saying borrowing costs should come down this year, but making clear that policymakers are not ready to move yet.
We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%.
And Minneapolis Fed President Neil Kashkari says he expects at most 2 rate cuts this year. Speaking at a Wall Street Journal event, Kashkari said while his base case of 2 cuts remains the same from December, he may revise that to 1 for the mid-March meeting. Well, let's get insights. Jahangir Aziz, head of EM Economics Research at JP Morgan, is still with us. You know, we kicked off the year saying 2024 is the year of disinflation, rate cuts. Now we've gone from 7 to 3, perhaps even 1.
Right. So I think the market is reacting to, what happened in November and December, where there was a lot of exuberance. We were looking at 6 rate cuts in market pricing. Then the data moved slightly against that, and immediately we started getting, the market now saying, 3.5 and 3 at best for this year. I think in this kind of times, we should listen to Chair Powell. And if you look at Chair Powell's testimony, which was basically what he had said in the last FOMC and what he has signaled in December, it's been a very consistent story that he does not require, or the U.S. does not need, growth sacrifice to bring down disinflation. A and B, it is not that they need inflation to be at 2% for him to start cutting, that it should broadly be in that direction. And more importantly, which was a reiteration again of what he said in FOMC, that he's not looking for better data to start cutting. He just wants more of the same data before he feels confident enough to start cutting. So I think that we will see rate cuts starting in June or around that time. And my sense is that you are going to get, at least we still have a baseline of about 100 basis points of rate cuts for this year, going up to another 100 basis points in the first half of next year, to about 200 basis points in the 12 months starting from June. I don't think that the data flow has changed that very much. Now, can it change? Of course, it can. But I don't think so far we have seen these small changes that have happened in inflation or growth surprising on the upside is really changing that dynamics.
EMs in Asia have been ready to cut for a while now.
Yes.
They're just waiting for the Fed.
Absolutely.
What does it mean for EMs?
So I think EM in Asia, let's start with that. I think that's the stumbling block. I think if you look at domestic conditions in almost all of emerging Asia, looking at disinflation, looking at where inflation is going, they're more or less into the inflation targets of the respective central banks. The clear concern is that they have very little margin over the Fed funds rate because they didn't really raise rates like the Latin Americans or the Central Europeans did. So I think the financial stability concern is the one that is holding them back to start cutting policy rates, and they will have to see Fed not only cut rates, but at least give a reasonable amount of assurance that the rate cuts will, and this is a reasonably strong easing cycle for them to cut rates. But having said that, if you look at the emergency or the stealth tightening that most central banks in Asia did back in September when U.S. rates went up and interbank rates had moved almost 40-50 basis points above policy rates, all of that, even before the rate cutting cycle has started, have all been pared back. So I think they are already ready to move in that direction, just waiting for Powell to belt the cat.
Jahangir, India has been an outperformer.
Yes.
We saw 8% growth, and RBI says 8% is still possible for the coming year. I'm just wondering, how much correlation do you see in terms of trade and the market?
So I think, in the case of India, both the third quarter and the fourth quarter GDP numbers, there was a lot of noise in it as much as there was signal because of deflation, etc., deflator problems, etc. But setting that aside, rather than going into the numbers per se, India clearly has done spectacularly well. And I think that you are seeing that being reflected in equity prices, obviously. In addition to that, India will be entering to the GBIEM index and the other indices, and I'm sort of can't remember how many more indices people are announcing almost every other day. So this looks like a very good path for India. I think we should not get bogged down by the numbers. What we should be looking at is what are the drivers of growth in India? And unfortunately there, it still is public infrastructure spending and services export.
Right.
The growth hasn't broadened out, and there is still a lot of excess capacity. So based on that, I think there is still a lot of room for India to continue to grow, and with keeping macroeconomic stability intact.
RBI is clamping down on shadow banking in India.
Yes.
How concerned are we? I mean, it wasn't too long ago that we were trying to clean up India's shadow banking.
Right, so the cleaning up had taken place both in the banking sector as well as in the shadow banking sector. Then the pandemic hit. Post the pandemic, we are now seeing, since last year, a revival in growth numbers. And it's exactly that argument that I just made, which is that India still needs to keep macroeconomic stability in place if it is going to benefit from all of these positives in the growth front. And RBI is clearly and rightly concerned with the fact that there's so much amount of expansion in uncollateralized lending.
Jahangir, you have to come back soon. Jahangir Aziz, head of EM Economics Research at JP Morgan. Thank you so much for your insights today. Well, plenty more ahead. We'll discuss whether tech stock valuations are looking frothy. Don't miss that conversation. This is Bloomberg. Welcome back. China markets just heading to lunch. The CSI 300 index giving up all gains for the day, currently in negative territory, down about 0.3%. And that's despite comments of support from policymakers. We have trade numbers out. Jan-Feb exports in USD terms are rising more than 7%, beating estimates in a big way. Imports in USD terms rising 3.5% year on year. The estimate is for about 2% growth. Of course, we heard from our guest earlier, it is the imports that they're looking at. That is a reflection of the economy. And now we're seeing some improvement in terms of those imports numbers. Against exports in USD terms rising 7% year on year. China has talked about doubling down on its exports. That's raising questions about how Chinese exports may be dumped, cheap Chinese exports may be dumped into the global market. As China goes to break, we have the Nikkei 225 coming back from lunch. Front and center is the yen breaching that 150 level. Of course, that's on the back of wages rising the most since June. Also, some government officials saying that they back a BOJ rate hike this year. Nikkei 225 extending losses for the day, down 0.9%. In terms of the yen, 148.71 is the level we're at right now. Now, pivoting to the airline space, Singapore Airlines budget carrier Scoot is looking to win market share in the post-COVID recovery in regional tourism, is adding 2 new destinations to its Southeast Asian network and expects to take delivery of the first of 9 new jets from Embraer next month. Let's get more from CEO Leslie Teng. Leslie, good to have you with us. How much clarity do you have in terms of how well you will do in 2024?
First of all, thank you for having me. I think we have done very well in 2023, and we are quite confident going into 2024. We will continue to do well because of the robust booking that we are seeing in the system. At the same time, as what you have mentioned, the first Embraer aircraft will join us next month, and that will give us a lot of opportunities to fly to uncharted territories, and that will give us a lot of opportunity to provide more options for our customers to continue to fly Scoot in the coming months.
What are these uncharted territories? What routes will you be flying?
We have announced 2 days ago that one, we'll be flying to Koh Samui in Thailand, second, Cebu in Malaysia, and we're also looking at another 3 to 5 destinations that we will fly to in the coming months.
In terms of taking delivery of your aircraft, how many more E2s are you looking at for the rest of the year? And how about the other aircraft that you may be having an eye on?
First of all, it relates back to the E2. We have mentioned that we have at least 9 new E2, out of which 5 will be delivered in 2024, this year. So we will be taking 2 delivery in April, and the remaining 3 will be delivered to us in the second half of 2024. The remaining 4 E2 will then be delivered to Scoot in 2025. At the same time, we also have our order book in terms of additional Boeing 787 Dreamliner, plus the Airbus 321, 320 new family that will join us from 2025 onwards.
So, Leslie, what does that mean in terms of capacity for the rest of the year and also in 2025? What are you looking at?
At this moment, our focus is really on 2024 because we do have 5 E2 joining us this year. We have announced 2 new destinations. We will, in a couple of months, announce another 3 to 5 destinations in the second half of this year. For 2025, I think it's too early at this point to share our plan, but definitely we are planning to grow every year going forward.
And in terms of the Chinese market, how much of a recovery have you seen? Are you planning more routes, more flights to meet demand?
China has been a very important market for Scoot and will continue to be an important market. Compared to pre-COVID capacity, we are now at about 80% of our flight back into China. For example, pre-COVID, we used to fly 100 times a week into 19 cities in China. Right now, we are flying 80 times a week into 70 cities in China. So we are back to about 80%. And with the relaxation of the 30 days visa requirement, we do see a spike in terms of travel demand out of China coming to this part of the world. And we are quite confident that in the coming months, we will be able to step back to 100% of pre-COVID capacity back into China.
Can you quantify that spike that you're talking about?
From the day that, for example, when the announcement was made that the visa waiver will start from 9th of February, which was one day before Chinese New Year, we do see a 2 to 3 times spike in terms of bookings during that period.
Is there a reason for you to add cities and capacities for China?
Our focus for China is that we will consolidate our operations in the 17 cities that we are currently flying to. So as I said, we are about 80%. There's still 20% in terms of frequency that we will continue to step up into the 17 cities, subject to the demand that we think are coming in the coming months.
Leslie, I'm wondering, in terms of opportunities for growth, what might that be for the rest of the year? Might you deploy or redeploy your aircraft to other destinations?
For 2024, we are planning a capacity that is higher than 2023. The E2 will help us to fly, as I said, to a few more new destinations. There are also existing destinations where we are planning to upgauge maybe from the Airbus 320, 320Y that we currently fly and upgauge to the Boeing 787, which are more than 300 seats per aircraft. Then that will give additional capacity to many of the popular destinations that we fly to. For example, in Bangkok, now we are flying a lot more 787 Dreamliner to Bangkok compared to pre-COVID.
Leslie, in terms of cost, fuel is the biggest cost for carriers. What assumptions are you making about fuel prices, and how are you hedging?
I think fuel prices is really a function of the supply and demand in the market. We do not speculate. As part of the whole SIA group, we jointly do fuel hedging together with SIA. It is a cost that we do not have control over, but definitely is a concern for us if a fuel price or the jet price go beyond a certain level.
So given the goals that you have for the year and in 2025, what do you see as the biggest risk for the company?
I think we are operating in a new environment post-COVID where customers' profile, customer behavior have changed. The operating environment has also changed as well in terms of the quite well-known supply chain challenges that the whole industry is facing. But as an ecosystem, we are working very closely with all our partners to make sure that we can, despite the challenges, still be able to meet our overall objective in terms of growing the organization.
Leslie, thank you so much for your time today. Leslie Theng, CEO of Scoot. Now here's some of the top global stories we're following. The US is said to be pressing allies to further tighten restrictions on China's access to semiconductor technology. The Biden administration's latest push is aimed at plugging holes in export controls, but sources say the effort is drawing resistance in Japan and the Netherlands, where the US wants ASML to stop servicing its chip-making equipment already owned by Chinese clients. And Chinese President Xi Jinping has called for patriots in Taiwan and abroad to mobilize against pro-independence efforts on the island. In a meeting tied to the National People's Congress, Xi spoke to a mainland political group focused on Taiwan. He asked them for an international effort to oppose Taiwanese independence and to advance the peaceful reunification of China. A Houthi missile strike on a commercial ship in the Gulf of Aden has resulted in the first confirmed civilian death since the militants began attack. U.S. officials say 2 people were killed and 6 injured aboard the bulk carrier named True Confidence. The Houthis claimed responsibility for the strike, describing the carrier as a U.S. ship, which its owner and the Biden administration have denied. Well, coming up, Woodhouse Capital Advisors shares their outlook on Indian market and why they think stocks are slightly overbought. This is Bloomberg.
I think we should not get bogged down by the numbers. What we should be looking at is what are the drivers of growth in India, and unfortunately there it still is public infrastructure spending and services export.
Right.
The growth hasn't broadened out and there is still a lot of excess capacity. So based on that, I think there is still a lot of room for India to continue to grow and with keeping macroeconomic stability intact.
There is still a lot of growth, he says, and that was JP Morgan's EM research head, Jahangir Aziz, speaking to us just slightly earlier. India starts trading in under 5 minutes. It is likely to be a positive open. Sensex index futures up by 0.2% gains pretty much across the board. And of course, we had Shaktikanta Das, the RBI governor, saying he expects growth of about 8%, which is faster than the government's own estimate. Taking a look where we are in terms of those financial stocks, they are in positive territory. JM Financial up about 0.7%. Bear in mind it slumped about 20%, and that's on the back of that RBI clampdown on shadow lenders, barring JM Financial, IIFL from certain transactions, including in equity bonds, IPO, as well as gold financing. We have IIFL Finance currently up by 2.8% as we lead up to the open, but bear in mind as well, it got dumped by about 20%. Well, let's delve deeper. Bring in Asia Equities reporter Ashutosh Joshi in Pune. Regulators in India seem to be cracking down on a number of companies. What's the worry here, really? What are we reading into this action?
Yeah, hi. I must say, while there is euphoria, there is caution also building in some parts of the markets becoming overly exuberant. We have seen India's banking as well as markets regulator coordinating on some of the recent actions, the latest being the ban on shadow lender JM Financial, which has been barred. A unit of JM Financial has been barred from giving loan against shares. There was a similar action earlier this week that was shadow lender IIFL was stopped from giving loans against gold. While these actions have been company specific, there is a sign that they are aimed at keeping risks in check, even though it may come at a cost of certain aspects of market slowing down a bit. But that includes the booming market for initial public offerings.
Keeping risk in check, keeping exuberance in check as well. Is there a sense these actions will continue? Are there any more areas where regulators could be looking at?
Yes, markets regulators SEBI and RBI have in the past hinted that there are certain issues which they are observing. The SEBI chief has been vocal about the challenges as a regulator they are facing. That includes a number of applications some of the IPOs in India have received, and some certain merchant bankers indulging into these practices. Now, primary capital markets in India have seen more than 50 listings this year. While the size is smaller, but in terms of the comparison, this number is far bigger than a bigger market such as Hong Kong. We have seen a number of IPO debuting at more than doubling in their IPO debuts. And while it would be unfair to say that these deals are speculative, the regulator has identified various areas where there is growing worry, and going by the actions, it sounds like there will be continuing to look into this area.
RBI says there are governance issues. Asia Equities reporter in Pune. Ashutosh, thank you so much for that. Let's get more on markets with Srabori Haralalka, co-founder of Woodhouse Capital Advisors, which manages investments for multi-family offices. Good to have you with us. First off, your take on the RBI's clampdown on those shadow lenders.
Good morning, and thanks for having me. Well, this was coming, for a while, and this euphoria, is one of the risks that we see in the market, because there is a lot of optimism, I would say, overconfidence right now, and we see customers investing blindly in the markets, chasing growth, and that has been fueled by these non-banking financial institutions who are lending monies for this kind of speculation. So, this is a good move, I think, by them.
But do you think that it will impact systemic growth in the non-lending business in India?
Not really. I think they're just trying to curtail the short-term froth in the market. And the non-banking financial institutions is just a small part of their business. There's a lot more that they are doing, which is supporting the economy, and that should continue, and that should continue to get valued.
Of course, when it comes to India, Sharboni, it is about the gangbuster growth in excess of 8%. How are your clients and how are you advising your clients to capitalize on that growth?
Well, we are a family office and an investment bank. We also do M&As, so we kind of understand the consolidation that's happening in the markets and the fact that being a high-growth economy, the equity markets are going to do well. We've already had about a decade and a half of a bull run, and that's going to continue. However, there is short-term volatility because of the elections coming up, because of this euphoria that we are seeing in the market. So, our focus as a family office always is on capital conservation. However, we also our theme continues to be a dynamic asset allocation one. And wherever there is any opportunity in a client's portfolio to invest in the equity markets, we advise them. And, managing large portfolios gives us the flexibility of investing larger amounts in private equity investments, which our M&A bank helps us value well. And that's how we are partaking in the growth.
Are your wealthy clients doing anything differently now compared to 12, 24 months ago?
No, consistency is what we kind of focus on because, that's how you ensure that while you partake of the high growth, you also ensure that the risks are managed well. And, we continue, like I said, with the asset allocation model. And wherever we see an opportunity for growth, we invest in equities. However, we keep a strong check on the kind of investments that we are doing. And, we look at certain sectors like maybe healthcare, pharmaceuticals. We look at dividend yielding stocks. We look at any businesses that get supported by AI. And those are good opportunities to invest in. And that's what we look at for our wealthy clients.
How about in terms of startups? Because we know you have a platform linking wealthy clients to startups. How much appetite is there?
So we started something called the Woodhouse Investment Network, WIN, where we launched 2 events where we actually got startup founders who we had curated and valued. And we got them to come and present their businesses to a very select few investors. And that was a good start to the business. But that is something we are doing on an ongoing basis now. We regularly have startup founders who come to us with their investment ideas, which we cannot, pick up on the M&A side because the size of our transactions are larger. However, if we feel that it's an interesting business, good promoter, we take it to our family office or our set of investors. We help evaluate them, help them to the valuation, understand the risks, and also negotiate their positions in that particular investment.
The thing is, has interest, appetite been affected by Byju's, by Paytm? What are you seeing? And what are you seeing in terms of the pipeline of IPOs coming to the market in India?
Well, my predecessor just spoke about, there's been a lot of about 56 IPOs that have hit the market in the last 12 months. And a lot of them are just being pushed. And, they are less than 100 million when they come and list. So, we don't really speculate. We don't really look at any IPO that is hitting the market unless we feel very strongly about the kind of business that it's a sustainable long-term growth business. We only partake in that kind of business. And, certain businesses have suffered in the last year or so for regulatory reasons. But like I said, if it's a sustainable business, it's a good business to invest in, we will have a look at it.
Sharboni, let's talk about risks. Geopolitical risks are rising in the South China Sea, in the Taiwan Straits. I'm just wondering how your investors, the wealthy families, are looking at these risks.
Well, the Indian markets have been fairly, strong in spite of all the risks that have, at any point of time, I was talking to somebody, and at any point of time, there are about 30 wars that are happening across the world. In spite of that, we see our markets doing well. We've been resilient. So while we do have an eye on what's happening, across the world in various areas, whether it's in the southeast part of the Asian countries or Middle East, we feel that the Indian markets have withstood a lot of shocks and will continue to grow well. And as long as we are not taking short-term speculative calls and are in it for the long term, and we understand the risk of the companies that we are investing in, we should be fine. Investors should be fine.
Is there reason to be concerned about hot money? Some are saying that perhaps we're beginning to see a bubble forming in India. There's so much froth. Consolidation is bound to happen, and that bubble is going to burst within the next 12 months.
I don't think so. Well, a little bit of that bubble is burst, when we just spoke about JM Financial and the rest who've been funding the short-term investments into IPO markets and others. And we are a little worried about the inverted yield curve as of now. The short-term rates are much higher than long-term rates. And that is probably the hot money we are talking about. However, there is a huge amount of wealth that the investors in India have managed to, create. And that money is coming into the market, as well as a lot of FIIs, which are, looking at the Indian markets because of the kind of growth that they see here. And of course, there is a lot of FDI flowing into the country as well. And all of that is fueling the growth. And I don't think that's hot money.
Sharboni, thank you so much for that. Sharboni Haralalka, co-founder of Woodhouse Capital Advisors. Let's do a check on Indian markets. Been trading for about 7 minutes from now. Pretty flat as we speak. Sensex currently about 1/10 of 1% higher. Really, the focus is on financials. That has to do with a clampdown on shadow lenders, barring the likes of JM Financial, IIFL Finance as well from certain transactions, equity bond, IPO gold financing as well. We're seeing some reprieve for JM Financial, which slumped 20% yesterday, currently up by 0.3 of 1%. Also, IIFL up by more than 6%. It got smacked by about 20% as well. Indian regulators stepping up, crackdown on shadow lending in India. Plenty more ahead. This is Bloomberg. Welcome back. Let's take a look at some of the movers here in Asia. WuXi AppTec, WuXi Biologics, front and center as the U.S. Senate and the panel advances its bill banning some of those deals, and those stocks are getting smacked on the back of that. WuXi AppTec currently down by more than 15%. We're also keeping an eye on JD.com. Of course, it came out with numbers, and of course, profitability is front and center. It's also announced a $3 billion buyback, and on the back of that, we're seeing JD.com tracking up by more than 6%. TSMC also currently up by about 4%. AI frenzy pushing that stock higher. In terms of the FX space, the ringgit is front and center. It is currently up by 0.4 of 1%. We're set to see Bank Negara keeping rates steady with the eye on that ringgit slide. It's been one among the worst performers in Asia this year. And the ECB also front center. Stay tuned in the coming hours for our live coverage of the ECB rate decision and press conference with Christine Lagarde. That's coming up at the times listed on your screen. 9:15 p.m. if you're in Hong Kong. That is it from Bloomberg Markets Asia. This is Bloomberg.